Pete has a job. Pete works hard. Pete wakes up early. Pete commutes to work. Pete sits in meetings. Pete does not know what the meetings are about. Nobody does. Pete gets paid anyway. Pete gets first paycheck. Pete very happy. Pete looks at number. Number looks good. Pete thinks he is rich now. Pete is not rich. Pete goes to bank. Pete opens account. Pete puts all pebbles in account. Bank says thank you. Bank gives Pete 0.5% interest. Pete says great. Pete does not know what 0.5% means yet. Pete will find out. Now Pete has problem. Pete needs things. Pete needs food. Pete needs shelter. Pete needs to get to work somehow. These things cost pebbles. Pete pays pebbles. Pebbles leave. More pebbles come in on payday. More pebbles leave immediately after. Pete notices pattern. Pebbles come in. Pebbles go out. Pete always has same amount left. Pete works harder. Pete gets small raise. More pebbles come in. More pebbles go out. Pete still has same amount left. Pete confused. Pete goes to Wise Old Penguin. Wise Old Penguin has seen things. Wise Old Penguin lost everything in the Great Fish Crash of '98. Wise Old Penguin knows stuff. Pete asks Wise Old Penguin for advice. Wise Old Penguin says one word: taxes. Pete did not know about taxes. Nobody told Pete about taxes. Pete went to school. Pete learned many things. Pete learned the capital of countries he will never visit. Pete learned to calculate the area of a shape he has never needed to calculate. Pete learned absolutely nothing about taxes. First paycheck Pete received looked big. Second look revealed problem. Something called federal tax. Something called state tax. Something called Social Security. Something called Medicare. Something else Pete cannot pronounce. All of these things took pebbles from Pete before Pete even saw the pebbles. Pete earned 100 pebbles. Pete received 68 pebbles. Pete looks at the missing 32 pebbles. Pete looks at the government. Government looks away. Pete very confused. Pete counts again. Still 68. Pete did not spend those other 32 pebbles. Pete did not lose them. Pete did not even touch them. They were simply gone before they arrived. Welcome to taxes, Pete. But here's the part that really gets Pete. Taxes are not one thing. Taxes are many things. Income tax takes pebbles from what Pete earns. Sales tax takes pebbles from what Pete buys. Property tax takes pebbles from what Pete owns. Pete cannot escape. Pete tries buying things. Tax. Pete tries saving things. Tax on the interest. Pete tries investing things. Tax on the profit. Pete tries owning things. Tax every year just for owning them. Pete asks Wise Old Penguin if there is anything without tax. Wise Old Penguin thinks for a very long time. Wise Old Penguin says probably not. Pete leaves. Now, Pete is stressed. Pete goes back to bank. Pete looks at savings account. Bank is giving Pete 0.5% interest on pebbles. Inflation is taking around 3% from pebbles every year. Pete is losing ground every single year just by doing nothing. Pete is losing pebbles while sleeping. Pete asks bank why interest rate is so low. Bank says this is very competitive rate. Pete does not find this competitive. Pete asks bank what to do. Bank suggests premium savings account. Premium savings account gives Pete 0.7% interest. Pete will now lose slightly less. Pete still losing. Pete leaves bank. Pete sits outside on a rock. Blue fish swims by. Blue fish sticks tongue out. Pete ignores blue fish. Pete discovers something called a tax bracket. Tax bracket is how much tax Pete pays based on how much Pete earns. Pete thinks simple. Earn more, pay more tax, fine. Pete is wrong. Tax bracket does not work that way. First pebbles. Pete earns get taxed at low rate. Next pebbles get taxed at higher rate. Next pebbles get taxed at even higher rate. Pete does not pay same rate on everything. Pete pays different rates on different portions. This is called marginal tax rate. Pete's head hurts. Wise Old Penguin explains with fish. First 10 fish Pete catches, low tax. Next 20 fish, higher tax. Next 30 fish, even higher tax. Last fish Pete catches in a very good year gets taxed the most. Pete understands fish example. Pete still hates the tax. Pete looks at bluefish. Pete counts bluefish as business expense. This may or may not be legal. Pete should ask accountant. But here's thing nobody tells Pete. Taxes can be reduced legally. This is called a tax deduction. Tax deduction is an expense the government may allow Pete to subtract from income before calculating tax. Less taxable income on paper means less tax on paper. Pete pays less. Some things that may qualify depending on Pete's individual situation. Eligible business expenses, retirement contributions, charitable donations to qualified organizations. Pete was donating fish to the penguin shelter every month anyway. Pete did not know this might be deductible. Pete very annoyed. Pete also discovers something called 401k. 401k is a retirement account where Pete puts pebbles before tax is calculated. Pete does not pay tax on those pebbles right now, but here's the beautiful part. Many employers match Pete's contribution. Pete puts in 10 pebbles. Employer puts in 10 pebbles. Pete now has 20 pebbles in retirement account. Growing, compounding, tax advantaged. Pete was not using this. Pete had free pebbles sitting uncollected. This entire time. Pete very, very annoyed now. Pete also discovers Roth IRA. Roth IRA is different. Pete pays tax on pebbles going in, but if Pete meets the eligibility requirements and follows the rules, qualified withdrawals in retirement can be completely tax-free. Pete puts in pebbles today after tax. Pebbles grow for 30 years. Pete takes out pebbles in retirement. Potentially zero tax on that growth. Pete stares at this information for a long time. Pete thinks about all the years he put pebbles in regular bank account earning 0.5%. Pete needs to sit down. Bluefish appears again. Bluefish sticks tongue out. Pete ignores Bluefish again. Here's what Pete learned. Taxes are not optional. Pete cannot avoid taxes, but Pete can be smart about taxes. Pete should find out if 401k is available at his job. Pete should check if employer offers matching contributions. Pete should look into whether Roth IRA makes sense for his situation. Pete should track potentially deductible expenses and verify eligibility. Most importantly, Pete should not leave free pebbles uncollected. Wise old penguin nods. Wise old penguin says one more thing. Get an accountant, Pete. Pete asks how much accountant costs. Wise old penguin says accountant costs pebbles, but a good accountant usually saves more pebbles than it costs. Pete thinks about this. Pete thinks about 32 missing pebbles from first paycheck. Pete thinks about uncollected employer match pebbles. Pete thinks about 0.5% interest. Pete gets accountant. Tax rules change. Eligibility depends on individual circumstances. What works for one penguin may not work for another. Pete should always verify current rules and consult a qualified professional before making financial decisions. This is not financial advice. Please do not sue Pete. The government will always take some pebbles. That is not changing, but how many pebbles? That part Pete can influence. Pete just needed to know the rules first. Now Pete knows the rules. Bluefish looks at Pete from across the table. Bluefish sticks tongue out. Bluefish does not pay taxes. Bluefish is a fish. Pete finds this very unfair.
Subscribe